Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. And as always, I have Vinny Motiwala with me on the show. Very good afternoon to you, Vinny. And looks like we are twinning with the attire, but the markets are actually not twinning right now. If you look at the way how the markets are performing, stellar recovery. That is what Nifty has staged from the day's lowest point. At one point in time, we were sub 18,700, and now we've recovered from those levels, almost a 95 points uptick coming in for the benchmark indices. Let's take a look at what Nifty Bank is doing. That is still under pressure in today's trading session. If you look at Nifty Bank, that is trading with a loss of about 0.2%, but still a recovery on that particular front. But as the broader markets has been showing strength since the word go, they were outperforming the benchmark indices, holding on to the positive territory, and that's exactly how it is transpired. You have the mid-cap index as well as the small-cap index at the day's highest point. So that's the way how the markets are looking like at this point in time. When you remember, we didn't have global cues as in the US markets were shut yesterday, but today we have to see how they actually open up for trade.
Absolutely, surely that's how the setup is looking for the markets. But let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals, we're joined by Ashish Kyal, while from the research team we have Harsh as well as Lisa joining with us. A very good afternoon to all three of y'all, and good afternoon to you as well, Cheryl. And I'm going to be starting with the first stock that's in focus, and that is Subros. Now, this stock is locked in upper circuit, and what is the main reason behind this? We had Nitin Gadkari, who yesterday at an event highlighted, which was that they have signed papers to mandate air conditioning in truck cabins. Now, cabins for the truck drivers in India should be air conditioned. That's what he said at the event, quoting him. Now, furthermore, this is a negative news in terms for CV OEMs, as upfront costs will go up and even mileage will go down, though some of the PV players have started offering ACs, but a mandate is something that is new coming in. It turns out to be positive for something like a Subros as well as Samil as well, and that is why we're seeing Subros also is locked in upper circuit. Subros already makes ACs for truck cabins, and Samil also supplies conditioning systems to buses stocks, and both the stocks are trading at an I beg your pardon, Subros is trading at an all-time high as well.
All right, add to that list, even Amber Enterprises is buzzing on the same news flow, that the fact that the road minister has mandated ACs for trucks. But let's move on and let's talk about Zee Entertainment, and that particular counter seems to be under pressure in today's trading session. At one point in time, the stock saw a nosedive, but from there on, it's actually holding on to those losses of approximately 6%. You have Bank of America that's come out with a note on Zee Enterprises, where they're saying weak business along with merger risk and SEBI investigation. They believe that Zee's fundamentals are deteriorating on back of these three factors. They're saying that they expect Zee's revenue growth to remain slow on back of slower ad and subscriptions. Also, they're saying Zee EBITDA's margins have anyways come down from 32% in FY19 to 14% in FY23. This is led by content and OTT investments, and they are giving a credit for sharp margin improvement in 21% by FY26, thus diminishing the surprise potential. They are saying also that the continued investigation by SEBI is increasing corporate governance overhang on the Zee, and also they are saying that the risk seems to be a risk to the merger with Sony, and if that happens, because of that, they have not given any rating to Zee as of now. They will await visibility on merger going through or not, and therefore they have held on to give any rating to Zee. So if you look at BOFA, there's definitely a tad bit bearish sentiment coming in on Zee Enterprises. Stock is down 6%.
Let's move on to the first stock on the charts, and Ashish, JSW Steel. Last 1 month, over almost 11-12% return. What's the upside now here?
See, the overall commodity stocks, if you look at it, has done exceptionally well. JSW Steel is consolidating over past 3-4 days. That's a good sign after a run-up. It has managed to ease out the overbought zone, and that's a good sign. And I'm expecting these stocks can move towards the level of 820 on the upside. The support for it is around that 760 mark.
All right, moving on, Lisa, let's talk about the stock of the day, and that is Hdfc Amc. We were all awaiting the Aberdeen block deal that has indeed taken place, but what are the finer details?
Well, yes, absolutely, Cheryl. Hdfc Amc, it's in focus on the back of Aberdeen selling around 10.2% stake, and they have fully exited Hdfc Amc, and they have earned a return of around 126 times from the time they bought the stake way back in Feb 2018. The offer price, that was at a discount of around 5% from the closing price, but still we can see the stock it's up around 8%, and that was because the stock in the last 6 months it has corrected around 11%, and there was an overhang on Aberdeen investment, and that has we can see fresh in-state buying also coming. So this will increase the company's free float market cap. And but the stock has to rally around 10% from the current levels to make it back to the MSCI index, as Nuvama says that an inclusion in the MSCI index, which will be around in August 2023, if it is included, it will see an inflow to the tune of around $135 million in the rebalancing. So that's why we can see HDFC trending upwards today in today's session.
That's HDFC AMC for y'all, but let's move on and talk about HCL Tech. And Ashish, this has surely been buzzing in trade when you look at it. In the last 6 months, decent returns of 13% is what it's managed to give. Yes, not as much as one would expect, but 13% is not a bad return in terms of HCL Tech. So what is the growth ahead for HCL Tech on the charts? What is the run-up that one should expect?
Yes, 13% I would say is fantastic, given that if you would have betted on Infosys or TCS, you know what would have happened to your portfolio. So the IT counters have been dragging, but HCL Tech is bucking the trend. So if you do the ratio analysis, this stock is outperforming the entire IT index from the large cap names, and has shown a very strong breakout in today's session from the cup and handle kind of a pattern breaking out there. So I think the stock is poised to move towards the level of 1250 and possibly higher, even towards 1400 from the medium term perspective. So I'm optimistic about this stock. And on the downside, the support of the stock in near term is around 1120.
All right, so that's the trade coming in on HCL Tech. Harsh, Shriram Finance, we know that the block deal took place yesterday. You have the details of the buyers, is it?
Well, yes, absolutely, Cheryl, and a plethora of buyers really supporting Shriram Finance's 2.5+% block deal, and you can see that on the back of that support, the stock is up another 3.5% in trade today. So we had the likes of Kotak, Morgan Stanley, Bajaj Alliance, Aditya Birla, and DSP among the buyers. Among other buyers were also Nippon India Fund. We also had Kotak Life participate in the block deal, and Societe Generale, which has been quite active in its buys in India of late, also participated in the purchase. So all of these healthy participation both from domestic as well as international investors, and Shriram Finance stock continues to be in focus.
All right, moving on then, let's talk about ITI, and this particular counter is in focus in today's trading session. The stock saw a good jump of approximately 5.8% last time I checked. From there on, it's given up the gains, but at 5.8% at a price of 115 rupees per share. That was the highest level since June 7th for the company. The company said that it has signed a tripartite memorandum of understanding, that's MOU, with the Center for Development of Telematics and Telecommunications Consultants India, and the MOU will be for creation and delivery of telecommunication products and related services for smart cities. If you look at the stock, that's trading higher for a third consecutive session and still now also holding on to gains of approximately 3% as we speak.
Let's move on and put the spotlight on Century Textile then, Ashish. What's the view on this one in terms of charts?
See, if you look at Century Textile, we have seen very smart rallies that started from 660 levels. It went all the way towards 820, and it has been consolidating over the entire past 1 month, giving a breakout just today. So after a good, it shows like a good flag pattern and a breakout right now coming in. Volumes have picked up big time. So I'm optimistic about this stock reaching to the level of 900 on the upside, and on the downside, 780 looks like a very important support.
Okay, let's move on and talk about Concor, or Container Corp as we know it as. This one is in focus because we have a note that's come in from Kotak, and they've downgraded the stock to a sell from a previous reduced rating that they had. Now, what they're suggesting is that Concor's pricing actually suggests a bit in terms of the margins, a weakness in margins and a change in pricing strategy after a period of 4 years, and a change in the guard at the CMD level may accelerate the shift to maintaining and growing its market share, a strategy followed by the earlier CMD until 2017. The Exim segment margin then at a high teens level were much lower than the current 24% levels as well. So right now they've downgraded Concord to a sell from a previous rating, reduced rating, and they've remained at the target price of 610. They've not changed that target price. But yes, that does suggest a bit of a downside from the current market price as well. And that's why we're seeing the stock is down almost 4% in trade today, Shari.
All right, that's Concord for you. But Karnataka Bank, Ashish, where do you see this particular counter headed from here on? Do you see further scope of upside for Karnataka Bank?
Yes, Karnataka Bank is bucking the trend. When Bank Nifty is under pressure, this banking stock has continued to move on the upside and has shown a decent more than 3% return so far. It has also formed a good rounding bottom kind of a pattern and is breaking out from there. The support is taking at near the 20 days average, which is now placed somewhere around 151. So as long as 151 is intact, use any dips as a buying opportunity for a target of 175.
All right, moving on, let's put the spotlight on Coforge, and that particular counter was declining in trade. Last time when I checked, the stock was trading lower down, in excess of 3.5%. The company held an analyst meet and they had told analysts that they do not expect to see a recovery in demand in the second half of FY24. They said that they will grow at 13 to 16% amid the uncertainties. They also said they plan to let go of employees to drive the gross margins in FY24. On back of that, you saw the stock actually fall in trade. It was down, like I mentioned, in excess of about 3.5%, but from there on, the stock has definitely recovered from the day's lowest point. Jefferies has said the margins are likely to be steady in FY24 as improvement in gross margins will be offset by higher selling and generative and administrative expenses. This is what they said, and they've also said that Coforge also plans to expand its presence in North America and Europe, which could add about 150 million in revenue in the coming year. So that's the word coming in from Jefferies. Meanwhile, Motilal Oswal is saying weak recovery forecast in H2 by Coforge adds to the risk of FY25 industry revenue growth. They said the company benefits from favorable demand in travel, transportation, and hospitality, along with insurance. And they said the company is expecting muted demand from BFS segment as well. So a lot of brokerages coming up with their notes on Coforge. No doubt they said the demand will be an issue, but they'll work on improving their gross margins.
Let's move on and talk about Kpr Mills Enterprises. And Ashish, this one had not done anything for the longest period of time. But finally, in the last 1 month, seems like we're seeing a bit of a turnaround there because 12% uptick in the last 1 month.
Yes, that is correct. Over last 1 month, the stock has started showing some kind of performance, and I think that will continue from here. So this is trying to catch a reversal from a long-term downtrend and now reversing back on the upside. So there is a lot of potential for the stock to move up. The immediate target for Kpr Mills Enterprises is going to be at around 900 levels, and on the downside, the support for the stock is placed at 790.
All right, moving on. Lisa, let's talk about Timken India. Why is this one in the spotlight today?
Another block deal on my radar. So Timken's promoter, Timken Singapore Private Limited, they have offloaded 8.4% stake in this company, or 84 lakh shares valued at around 2,629 crore. Well, they had fixed a floor price of around 3,000 per share, which is a 14% discount to Monday's close price. And as per the latest shareholding pattern, they had owned around 67.8% stake in the company. And other companies, the major funds that have stake in the company include PGIM India Trustees, SBI Small Cap, as well as Nippon India. Well, after this fall of around 7%, the stock, this was the steepest fall seen in the last 28 months. The last time that the stock had fallen to this extent was way back in Feb 2021. And today's fall also means that the stock has given up all the gains that it had received in the last on YTD basis. So, well, we can see the stock is trending downwards based on the back of the block deal.
Okay, keep an eye out on Timken India as well on the back of the block deal. Ashish, Rupa and Company, that's the stock that you've picked out for us. At the current levels, is it a good time to buy? Because we've seen the longest time and longest period of consolidation for this stock.
Yes, absolutely. So the stock has been consolidating for quite some time, but it is poised to give a breakout. I think the accumulation would have been completed around these levels, and we can clearly see that it formed a very good candle about 3 days back, and from there it was forming some consolidation. So I'm optimistic the stock will break about 280 to reach the levels of around 310. And on the downside, the support is at around 255.
All right, moving on. Harsh, why is RK Forging in focus today?
Well, yes, in fact, it's been in focus since the last couple of days after that massive 12,000 crore order win in, in consortium with Titagarh Rail, of course. But you can see the stock continues to gain traction, and at least what's new and what's really spilling in is that they're all set to meet a couple of large investors in the United States, including in New York and Chicago. You have the likes of Barron Private Equity, Barron Capital, my apologies, who they will also be meeting up with. And they've also uploaded an investor presentation which they will be presenting to these investors, whole plethora of investors, almost 10 plus investors that they'll be meeting and presenting this to and very positive and bullish commentary coming through in that slide deck as well. So on the back of that order win mainly, and of course this news trickling through as well, you can see stock up and away.
Okay, absolutely. Keeping an eye out on RK Forgings as well. Let's move on and talk about Metropolis then. And what we see in terms of this, Ashish, is that, yes, there was a news flow that came in sometime at the beginning of this year, and then we started seeing the stock see a fall. Again, now seems like the stock is coming back to those 1400 levels right now, also trading around those levels as well. A good buy at the current levels.
Yes, if you look at Metropolis, it has formed a triple bottom pattern around 1200. It was moving in a range of 1200 to 1350 for quite some time, and that range has now broken. So if you look at the target, we should get at least 150 points target on the upside, giving us the levels of 1500 as the target basis of this pattern. And 1350, where the breakout happened, is the stop loss one can play. So over near term, 1500 is the target that one can expect, and possibly overall we should break that as well. And also very importantly, the pharma stocks have started showing some kind of a bounce back. Pharma and healthcare space over next few months or 6 to 7 months can do much better. So Metropolis looks it's just starting the up move.
Okay, it looks like it's just starting the up move. That's the word coming in from Ashish on Metropolis. Let's move on and talk about Sula. Now, Sula Vineyards is in focus because the Kotak has actually initiated coverage on the stock with an ad rating given a target price of 500 rupees per share. What they're saying is that they expect India's wine industry to see a growth of around 12.5% in terms of revenue CAGR over the next 5 years, mainly led by under-penetration that's there in the country, premiumization, that's going to be a focus as well, wider acceptance of wine as a social drinking and healthy alternatives to spirits, stable regulations are other factors that come into play as well. For Sula especially, they expect an estimate around a 13% revenue CAGR growth over the next 3 years. EBITDA is expected to see a CAGR growth of around 12%, while profits 14% CAGR growth over the same period, that's FY23 to FY26. That's going to be mainly driven for Sula by the 10% volume growth in CAGR in the own wine brands, as well as primarily led by a 30% CAGR growth in the premium segment as well. So strong volume growth is something also that they are expecting coming in for Sula, and that is why we are seeing a good uptick coming in the stock today. It's up almost 2.3% in trade as of now.
All right, moving on then from Sula Vineyard, let's talk about then Godrej Properties. Ashish, how is Godrej Properties looking to you on the charts? We've seen the realty stocks be on overdrive mode. Do you think that Godrej Properties will be able to continue with its move?
Yes, it looks like the entire real estate space has been buzzing for quite some time, and Godrej Properties has shown a spectacular run from 1050 to around 1550 levels. That's a 50% gain over just 3 months of time that we can see. And there is still no slowdown in the momentum. There is no divergence. I think it's an opportunity to re-enter the stock. Over past 2 days, we saw some kind of a dip. That's an opportunity to re-enter, possibly for the target of 1700 on the upside for this stock. And the support is at 1480 levels.
All right, moving on, let's put the spotlight on DV's Laboratories. Kotak Institutional Equities has come up with a note where they've reiterated a sell call on DV's Laboratories. They've set a target of about 2600 rupees per share. What they are saying is that DV's custom synthesis, that is CSM segment, stays a black box. They're saying unlike the global peers in the CSM segment, there is absence of guidance, and on back of that, they've given they've reiterated their sell stance target of 2600 rupees per share, which is much lower than their actual stock price of DV's laboratories. Nevertheless, the stock is now trading with losses of about 0.9%.
Let's move on and talk about a textile name on the charts, and that is Kpr Mills. Ashish, what's the view on this one? The stock surely has been gaining momentum, has picked up pace in the last 6 months as well. 31% return in the last 6 months. How much more upside? What is the target that one should keep?
Kpr Mills has shown a good move even today's session. If you look at the volumes have been big and the stock is up by more than 3%. So there is definitely more interest emerging in the stock looking at the price action. I think the stock is going to be moving towards the level of 700, which is the target, and the stop loss can be maintained at around 625.
All right, moving on. Lisa, Sun Pharma, why is this one in the spotlight? We've seen over the last 1 week, we had multiple technical analysts talk about Sun Pharma, but today at least we have some news flow, looks like it.
Right, Cheryl. So Sun Pharma subsidiary, that is Sun Pharma Canada, they have received an approval from Health Canada, and this is for Winlevi, which is the first and the only androgen receptor for the treatment of acne vulgaris. So they have received approval, and the stock it gained an early morning trade around 1%. It was in green, but since then, considering the overall weakness in the market, it has slipped down and it's now trading in triple digit. So well, but if you look at the past 1 year, the stock has grown around 23% in line with Nifty, and it has also outperformed Nifty Pharma, which has gained just 12% during this period. So that's on Sun Pharma.
Okay, let's move on and talk about Spark. And Ashish, in the last 6 months, seems like, it managed to touch that 220 mark and then saw a sharp fall coming in after that. Now again, it's trading slightly above those 200 levels. How is it looking to you?
Yes, see, it has formed a higher high, higher low formation on the daily time frame chart after long, and that's a simple Dow theory that suggests that the trend for the stock is changing from down to the upside. And the major hurdle for the stock was at around 200. It has managed to cross that in today's session. So if it manages to close it above that 200 mark, I think the stock is headed towards 220 again on the upside, and the support or the stop loss can be maintained at 190 levels.
All right, moving on then. Actually, let's slip into a break on this edition of Market Fatafat. When we come back, we'll continue taking you through all the stocks buzzing in trade, so don't go anywhere.